Watch this morning. We're talking about the American dream, owning a home and then retiring.
Yeah, but there's a big debate over which you should do first. You know, back in the day, one of the highlights of retirement was the ceremonial burning of the mortgage. Well, a lot of people retired debt-free with great benefits provided by their company's retirement plan. But in today's world, that's not likely because more Americans are going into retirement with big debt like their mortgage, and in most cases, there is no longer the big pension. Joining me now to talk about it is Certified Financial Planner Joe Bert. Always good to see you, Joe. Appreciate you being here. All right, what are your thoughts on that? Should you, a lot of people on the radio, and Dave Ramsey, I'll mention he's been on the show numerous times, says get rid of that mortgage. What are your thoughts on that?
It depends. It depends on where you are in your life cycle. It depends on the size of the mortgage. It depends on the interest rate. It depends on your tax bracket. It depends on what other assets you have. I don't believe categorically saying pay off the mortgage is a good idea. There's two sides to it, the emotional side and the financial side. And oftentimes the emotional wins out to the detriment of the financial.
But, you know, if you don't pay off the mortgage and all of a sudden you're in retirement with a mortgage payment, if we don't have a pension these days, that can be a pinch for a lot of people. How do you tell people when they're planning for that? Well,
there's no question about that. That's why planning is so critical. You have to see where you are in your retirement years, where your income is going to come from, and how you're going to deal with it. So it's what planning is all about. And now a lot of people are making these extra mortgage payments. If you want to get on the extra, you know, on the bandwagon of making extra mortgage payments, a lot of people pay their mortgage, they cut it in half and pay it every 2 weeks. This way you're getting in 13 or an extra payment over the course of the year. You know, if you do it every 4 weeks and make a payment every 4 weeks, or 13 4-week periods, you pay off your mortgage a lot sooner. But I'm not a big believer, John, in running in and paying off your mortgage right away. And one of the worst things you can do is to reach into your 401k, take that money out, pay taxes on it to pay off your mortgage.
Explain that more, because I'm sure a lot of people have thought about taking the money out of the 401k to pay off not only the mortgage, but maybe some high-interest credit card loans. What's the danger there?
The danger is you're really hitting yourself right upside the head by paying all the taxes on it. In fact, we were talking there before the break. I have a client up in Atlanta wanted to buy a house up on the lake, $325,000 house. He wants to take the money out of his 401k. In his tax bracket, by the time he's done with that, he pay about over $600,000 for that house. Makes absolutely no sense to do that.
So that house is not on sale. You're paying double for that house because of the hit. And very quickly here, we see ads for reverse mortgages quite often. What do you think about those? Good idea or no?
In the right circumstances, John, I think they're great. You need to understand a reverse mortgage is you're borrowing against your house. You don't lose your house. You got to be 62 years older, but it's a great way to get money out of your house if you're going to be there for a long period of time. I've seen it work very, very well with clients, but you want to be sure that you're going to pay the property taxes and the insurance. That's the horror stories that you hear for those people and of how they messed up their reverse mortgages. You don't want to use it like a piggy bank, but you want to use it to supplement your other income. Can be a great tool.
All right. Joe Bert, Certified Financial Group. What's your website, Joe, in case people want to check you out?
You can find me at financialgroup.com.
Or just search Joe Bert. You're right there at the top of the list. Thanks, Joe. Good to see you. We'll talk to you soon.